Hi everyone, in this video I am going to explain you about the financial accounting module. Now what is this financial module? Financial accounting software simplifies the process of recording transactions, managing payables and receivables, collecting taxes and closing the books, and enables timely, accurate reporting and greater control of financial assets. With real-time access to financial data, you can quickly drill into details to resolve issues and generate statements and disclosures to comply the multiple regulatory financial compliance requirements. Now in this finance module, what are we going to cover? In this financial module, we are going to cover about the receivables. Now, what is this receivables? In my past videos, I have demonstrated about the sales module, which is order to receipt. In short, we call it as OTC flow, which comes under receivables. Also, we have demonstrated about the procurement module, which is P2P process, from purchase intent to payment process. Now this process will cover as payables. Now what is this revenue? Revenue will cover the sales module. Under sales module, whatever the sales you do, it will be treated as a revenue. In case if you are getting revenue from any other sources like rental income, even that also will be treated as revenue. In case if you have received any discounts from your vendor, even those are also can be taken into revenue. What is the expenditure? Expenditure means it can be any type of expenditure within the organizations. Okay, for example, you take the employee salaries, office maintenance, staff welfare expenses, fuel expenses, stationery expenses. Okay, there are many kind of expenditures which will involve in the company. Now also there are assets. Now what are these assets? You have already seen the fixed assets demonstration in my previous videos. If you want to know more about the assets, please watch the fixed assets video. And what is this liabilities? Liabilities can be your payables as well as other payables. Now what are these other payables? There might be a general bill payables like electricity, water, AMC, annual maintenance contracts, or any other loans. So these all are treated under liabilities. Now what is this aging analysis? Aging analysis will cover with the combination of suppliers and customers. For both there will be a aging analysis. Now in this accounting cycle, what is the main important thing? The important thing is the transactions, which are your source documents, and whatever the transactions you record, those all will be posted to the financial accounting. Also, in case of any adjustments within the financial transactions, if you want to do it, you can do those with the journals. Now what are these journals? Journals are used to rectify the errors, also to do the adjustments of the accounts. Now in accounting cycle there are main three reports. One is your trail balance. Now what is this trail balance? Trail balance is a combination of income, expenses, assets and liabilities. Okay, these four will cover in the trail balance. There is one more report in the accounting cycle, which is your profit and loss. And what is this profit and loss? In profit and loss you will get the total incomes and total expenditure. Then you will have a balance sheet. Now what is this balance sheet? In balance sheet you will have your assets and liabilities. Again assets are subcategorized under current assets and fixed assets. Okay, again under that you will have short term assets, long term assets. Again you will have liabilities. In liabilities you may have your payables. Also you will have your bank loans. In case if you have bought some money to invest your company, then you will have other liabilities. Okay, with all these combinations you will get the financial statements. Okay, these financial statements will help the company to see where they are standing in the business, what is the profit or loss they are making. Based on these financial statements only we can tell how the company is performing. Now what is this ledger? Any transaction you do, every transaction will post debits and credits. Okay, these debits and credits will be posted in the ledger. Every transaction will have a balancing debits and balancing credits. Now you may ask, what is this debits? As an accounting person you may know what is debit and credit. If the person is not from the accounting background, he may confuse, what is this debit? I am not from the accounting background. Okay, now I will explain you. Debit means what comes in. Credit means what goes out. Okay, now to understand this, I will give you few examples in Focus-ERP with every transaction. Then you will come to know what is debit and what is credit. Also, there are some important things you want to know about the ERP finance module features. As I said, you will have your ledgers, which is your general ledger. You will have your account payables. You will have your account receivables. Profit tracking, which will be tracked through P&L report. Fixed assets management, where you can post your depreciation as well as you can manage your fixed assets. Also, you will have a multi-currency management within the ERP software. I will show you how to manage the multi-currencies in a separate video session. Also, you can manage your tax management. It depends on the country specific statutory norms. If it is in India, you have GST. If you are in Emirates or in Gulf countries, you will have VAT. Okay, if you are in African region, you will have VAT. Okay, like this you can have different country specific tax managements. Now what is this risk management? Okay, how to manage this risk? Okay, if you want to manage this risk, you should know about the budgeting. We will also cover one session about budgeting also in the upcoming videos. In budgeting you can manage the risk management. Okay, it's a very brief subject. I'm going to definitely explain you what is risk management in the next upcoming video in the budget module. Okay, with all these combinations you can generate the required reports. Okay, now how this ERP will be useful to us. Okay, first thing, with the ERP you will get the productivity. And what are the advantage of using this ERP finance module? First thing, you will get the financial clarity on posting every transaction, and whatever data you enter, you will get the data accuracy at each level. Okay, you can drill down the transactions, you can track the documents, and you can forecast your budgets. You can even do the automatic payments. You can do the centralization, like if you want to integrate your bank accounts and you want to do a automate payments, yes, FocusERP also does that. We already integrated with ICICI Bank in India. Okay, slowly we will integrate many banks if they allow to use their APIs. Also in our ERP we have a centralization. What is this centralization? Centralization means one company may have different cost centers, different branches. These branches accounting can be used within one software, which is our FocusERP software. At any point of time, on your fingertips, you can get the desired reports with the centralization part. There are 7 important financial reports. As I said, you will get a trading account. Okay, you will get a trail balance. You will get a profit and loss account. You will get a balance sheet. You will get a debitor balances, which is your receivables. You will get a creditor balances, which is your payables. Also, you will know your cash and bank funds position. Okay, every financial expert will see these reports. By seeing these reports only, he can tell you where your company is standing. So you have to know about these reports. Now in Focus, I am going to explain you each and everything how to manage this. Also in my channel, I am going to give a link about the financial accounting document. Please go through this document. In this document, it will tell you the introduction of the ERP finance module. It will also tell you the accounting cycle. It will tell you what is the advantage of ERP module. Okay, you just go through this. It will tell you each and every line in detail. Okay, now how does this ERP will work? How this funds manipulation control will work? Okay, so what are the vendors of ERP finance module? It will also tell you about the general ledger. So please go through this document and see what is the difference between the normal accounting software and the ERP accounting software. Okay, let me take you to the FocusERP software and tell you how to use the finance module. I will take you and show you 2 examples. One is you are a new company starting a business. Okay, when you start a business, you are going to invest some money. Now, from where this money should come? Are you investing from your own personal account, or you are borrowing from anyone else and investing in the company? Okay, let me take one example that we are investing our personal amount. Now let me start this and show you how to invest this. Okay, the base thing to start this company is your accounts. Okay, without having accounts you cannot enter the transactions. Please go through my previous videos how to create an account, then you will know how to define the account, how to create the account, what is the nature of the account. Okay, for the people who are not into accounting background, I'll tell you, if you are creating an account, first thing you have to know the accounting type. Okay, there are different type of accounting types. First thing is you have to remember about the profit and loss account. In profit and loss account, there are only two type of accounts. One is income, one is expense. Now whatever account you are creating, you have to map with this profit and loss and balance sheet account. In balance sheet you will get assets and liabilities. Okay, now based on these four types, I will show you how to create the accounts. Login into your company. Whenever you start your company, you have to open your books. Okay, for example, I am investing 50,000 in my company. Okay, Chakri has invested 50,000 in a company. Now Chakri has got a cash. From where he has got a cash? From his own personal account. Okay, so you have to create two accounts here. One is Chakri capital account, share capital account. Okay, and one is cash account. Okay, to start with this you need two accounts. Now how to create that accounts? Okay, first you have to go to home, master, account. Here you have to search for two accounts. One is Chakri account, CHAKRI. Click here. Okay, it is not showing. When I press enter, it is not showing. Let me search here also. It is not showing, it's showing blank. Let me search for the share capital. Even share capital is not there. Now if I am borrowing money from Chakri, I have to pay him back in future, right? So I will become the company will become liable to Chakri. So let us create one account for Chakri. Now you see here on the left hand side, you will see all the accounts tree. Now here you see where is your liabilities. Here you have your liabilities. Okay, click on your liabilities. When you click on your liabilities, you will get all these group names. Now you decide where you want to create. Okay, trade payables means you will have all your suppliers. Okay, accrued liabilities means these all are your payable accounts. Like if you want to, if you have not paid any salary to your employee, then it will be taken into accrued liabilities. Okay, now in liabilities, let me create one particular account. Now how to create that? I'll go to home, masters, account. I'll click on new. Now you see accounting type, it is showing as assets, but I don't want to create on assets. I want to create on liabilities. Click on this liabilities and click on new. Now you see the accounting type, it is creating under liabilities. Now I'll give Chakri share capital. Okay, I'll just give my name as Chakri share capital. Okay, I'll give my code as L001. If you want to auto code, please see my video. I have even demonstrated how to auto allocate the code. That also you can do it. Now you see I am creating Chakri share capital account. I'll just save it. It is saved. Okay, now you see my account has come. I'll select the Chakri. Okay, now it is showing under liabilities. You see here the accounting type, it is showing under liabilities. Now let me search for cash account. Now you see here I have a cash account, so I don't need to create. Now we have two accounts, one is cash account, another is Chakri share capital account. Now how to put these entries in the software? To put these entries in the software, you have a voucher called opening balances. Okay, whenever you open your company, please make sure you have to define the company opening date. Here if you edit the company, here you will see your accounting date, which when your books have been opened to start the transactions. Okay, you have to make a note of it. Now I go to menu search, opening balances. Okay, you can go by a quick menu search, or what you can do is you can go by a financials, transactions, journals. Under journals you have opening balances. You can go by the menu level, or you can go by the quick search level. I'll click on new. Okay, now when this money has been received into the company from Chakri, so I'm just taking as 31st March 2022. Okay, now what I'll do is, first I need to debit. What I have to debit? Whatever is coming in, cash is coming in, so I have to debit the cash account as 50,000. Okay, now what I have to credit? From where I bought this money, from where I borrowed this money? From Chakri. So I select the Chakri account. Now I am giving as a 50,000. I'll just save. After saving, I'll just go to the previous voucher. Here I will see the posting details. Now in posting details, it will show the debit and credit. What is debited here? Cash is debited and Chakri share capital is credited. Okay, so that means you have a liquid cash in your account for doing any kind of purchases. Now how to see this in the general ledger? Let me take you to the general ledger. How to go to the general ledger? In financials, we have reports. Under reports, we have a ledger. Click on ledger. Okay, select all accounts. Okay, I'm just selecting, or you can select individual account also. Just to show you, I'm just selecting all the accounts. In this company, we have only one transaction, which is opening balance. Now the start date is 1/4/2022. End date is your system date, which is 11/6. I'll press OK. Now you see here, I have an opening balance. Cash is debited. Chakri account is credited. Now let me see the trail balance. What is the effect of these two accounts in the trail balance? In the menu search, I'll select the trail balance. Okay, this is one way. Another way is go to financials, final accounts, click on trail balance, give the date range, and here you have a accounting level. Now the system has only 4 levels. If you have more than 4 levels, it will show that levels here. You can select that level and click on OK. I'm just selecting 4th level. Okay, now I click on OK. Now you see here, it is showing assets is the main group. Then under that we have current assets. What is my current assets? It's my cash and bank. Okay, under current assets I have a group called cash and bank. Under cash and bank I have a cash account. You see here, cash, it is showing 50,000. Now you see here, this Chakri share capital account, there is no group. It is not within the group. Now how to clear this? Okay, it is showing Chakri as a credit. one account is debited, another account is credited. Don't see this group account, see the main accounts. In case if you want to see in a level 1 also, you can see like this. Now you see in assets we have 50. In liabilities it is not showing the group name. That means you need to modify the grouping. Now let me do that. How to do that? Go to home, masters, accounts. Now you have this Chakri account. Under Chakri account, I will take this Chakri account and I will just move into the liabilities. Now it will ask you, are you sure you want to move Chakri share capital into liabilities? I will say okay. Now this account has been moved. Let me show you the trail balance again. I'll select level 1 and say okay. Now you see here, now you have assets 50,000 as an opening. I'll just expand this. Now you have liabilities credit balance as an opening. Now if you want to see what are the details available in these groups, you can select the increase the level as 4 and press OK. Now you see here under liabilities I am getting Chakri's name. That means I have to pay to Chakri in future. Now I have cash. Now how to utilize this cash? Also you have a cash book here in financials, reports, you have a cash and bank. Under cash and bank you have a cash. Here you can select the cash account. You can use the multiple cash accounts also. Balancing type also you can select daily, weekly or none. You can select as none and say okay. Now you see it is showing 50,000. I have a opening balance. Now from here you can do the purchases. This is how you have to do the opening balances. Okay, this is how you start the books. Now this is one example as a new company. If you are an existing company, how to start the books? Let me delete this opening balance. Okay, here I'll delete this account. I'll completely delete this. Okay, let me give you one small example. In any company which is already running, you will have your receivables, you will have your payables, you will have your assets, you will have your liabilities. How to record that? What you have to do is, whenever you record the opening balances of the existing company, you need to ask that company's financial controller or accountant to give the final balance sheet after auditing is done. That balance sheet you need to enter here. Please note that all debits and credit total should be matched. If those are not matched, what will happen? Okay, I have my receivables, say customer A. He has to pay me 5,000. Okay. I have customer B who has to pay me 2,000. Click on pick amount, click on pick and click on OK. Now I have customer C who has to pay me 1,000 rupees. Okay, 1,000. Now you see, I'll just save this. Can you see here? I have only the debit of total of 8,000. I don't have the credit. In opening balance you can enter any way you want, but when you go to reporting you will get a opening balance difference. That means your totals are not balancing. Okay, let me show you that. I'll go to a trail balance. Whenever you go to a trail balance, this is the first report every auditor, every accountant, every financial specialist, every finance controller will see this report. If this report has any discrepancies, then he will do the auditing. I'll just click on OK. Now you see here, I got one more account here, control accounts. Now it says debit side customer A 5,000 he has to pay me, customer B 2,000, 1,000. But what is the credit? From where this money has come? Now you might have done some sales to customers. Now from where you bought this? Okay, maybe you have purchased these goods from your vendors. From one vendor you have purchased. Maybe those goods price is 7,000. 1,000 you might have made a profit. Okay, that you have to record. How to record? Please go to the same opening balance. Okay, please put a question yourself. If you have done any business in last year, okay, these are the customers for whom you have given on a credit, and these people owe you. But this material from where you have bought, maybe you also bought these materials on credit from one supplier called vendor A. That supplier has given these goods for 7,000. Okay, now what is the difference amount? 8,000 minus 7,000, 1,000. Maybe you have made a profit, which is your reserves and surplus. Okay, so just you need that account to be created here, or profit and loss account. You can give it to profit and loss account. Credit to profit and loss account. Now save it. Now go to the trail balance now. Can you see here? Still it is showing in a control account. What happened here? In control account it is showing 1,000 but this 1,000 has not been transferred to anyone. Okay, this has to be transferred to the person who has invested in a company. Okay, you should not directly book as a profit. In the last year you made profit, but this profit, where it is standing? This profit might be standing in the cash, or this profit might be standing on your shareholder accounts. Okay, let me change this. I'll go to masters accounts. I don't have this account, so I need to create. Now what is this reserves and surplus account? Okay, now last year I made some profit in a company. Okay, I have bought the goods for 7,000, sold for 7,000. I made 1,000 as a profit. Now that profit is still in the company. Whenever my customers will pay me, then only I can pay to my partners or within myself. Okay, so for that also you have to make an arrangement for creating a account. Now what is that account? It is called reserves and surplus account. You are reserving that profit on a virtual name. You can give it as a virtual name, or you can directly give it to the required partner name. Normally first it will be put in the reserves and surplus account. Let me create that. Now what is this reserves and surplus account? Reserves and surplus account is a liability account. This is the liability account. Now I have created a Checkry shares capital account. Like this I can create a reserves and surplus account also. Okay, let me go to liabilities. Okay, I go to liabilities. Now this can be an liabilities group. Under liabilities group, I'll double click on the liabilities group. Okay, I just click on new. I create an account called reserves and surplus account. Okay, I'll just save this. Okay, now let me see where this account is created. Now here I have a reserves and surplus account. Now let me transfer this account to liabilities. I'll just move this to liabilities. Okay, it is already in the same group, it is saying. Okay, now I'll go to the opening balances and I will change my that 1000 figure to reserves and surplus account. Now what happens? Let me see the trail balance. Now you see there is no control account. This is how you have to manage the accounts. First you have to know what is the nature of the accounts. Then it is very easy to understand the account. Now this profit I have made, still I have not paid. That means I am liable to pay. That's why under liabilities I have created an account called reserves and surplus. I have transferred that profit to that account. So any existing company, you have to enter the opening balances in this form. If you have any queries, please comment in my YouTube channel. I will make you understand how to do these transactions. Hope you have understood this opening balances. Now I'll show you what are the receivables, what are the. Now we have entered customer A, customer B, customer C. All these customers will fall under receivables because they owe us. They owe to the company. Now how to see these receivables? Any invoices recorded, any credit notes given to the customer, any sales returns happens, any receipts received from customer, any cash or bank payments received from customer, these all are entered into the transactions under receivables. Now we have already entered opening balances. Now let me show you what is this receivables. In financial accounting, we have receivables and payable analysis. Under that we have customer detail. Okay, here we have customer outstanding bills. In this it will show only the customer names. I'll just select all the customer names. Date option, I can have different date range. I will select as on date. I will press OK. Here you see whatever I have entered in the opening balances, it is showing here. These all are my receivables. Say customer A has paid 1000 rupees to me, okay, on April 15th. Okay, I'll just go to I'll just go to financials, transactions, cash and bank. Say he has given me a cash of 1000 rupees. Let me enter that and show you. Here I'll select the cash account. That means money is coming in, so I'll select the cash account. Here I'll select the date. On April 15th, he has paid me the amount. I'll just select who has paid me. Customer A has paid me. Okay, I'll enter 1000. Now when I click tab, it will show me all the transactions which are done in past. I will adjust to this opening balance. Click on the adjust and click on pick. Then I'll click on OK. Then save. When you save this, now you go and see the customer ledger. Go to ledger. Select the account called customer A. Customer A. It is selected and press OK. Now you see in opening balance we have entered 5000. Customer has paid me 1000. Now the balance is showing 4000. Let us go and see what is the effect in the outstanding bills. Just now we have seen one outstanding bills report, customer list of outstanding. We will select all the customers and press OK. Now you see invoice amount was 5000. It is showing the balance how much? 4000. That means it is 1000. It is adjusted. Okay. For others, nothing is adjusted. They have not paid. This is how you can see the listing. Also, what you can do is we have a aging analysis report. What is this aging analysis report? Any bill you raise to your customer, based on your terms, you will give a credit limit. For some customers, you will give 7 days. Other customer you will give for 15 days. Some other as 30 days. Based on that due dates of the invoice, they have to make a payment. If they have not paid, how to track them? That is how we get in aging analysis report. So we have given a report called under receivables and payables. Receivables and payable analysis, we have a customer detail. Here we have a aging details. Click on customer aging details. Select all and press OK. Now here it will show you from when these bills are pending. Now you see this opening balance is pending since 210 days. Okay, so like this you can see this report and you can call your customer and inform him that your amount is due, please pay the amount. If you request, you can send the ledger statement or you can send a statement also. We have a statement report here. I'll show you that. In financials, receivables and payables, customer detail, we have customer statements. Select the required customer's name and press OK. If you want this to be export or this to be email or this to be export to Excel sheet, you can do it. Let me do it to Excel sheet. Now you see the report is exported. This statement you can email to customer or you can convert into PDF and you can email to customer. This is how you get the customer statements. Okay, we have covered the receivables part here. In case if you have to invoice any new invoice, just watch my sales module. You will know how to invoice the new invoice to the customer. Here also I can show you. Go to finance, transactions, sales, click on sales invoice. I'll just do the sales invoice. Okay. This is under menu. This has been moved under cash and bank. This thing we can just move that into sales. Go to settings, configure transactions, document customization, search for sales invoice. Click here. Now this is under cash and bank. Let us click on sales and update. Now just re-log in. Now you can see that sales invoice in the sales menu. Now go to financials, transaction, sales, sales invoices. Okay, you can record the new transaction if you want. Let me record on today's date. Customer A. Okay, you have to select the warehouse here. Select the what item you are selling him and save it under new reference. Click on pick and say OK. Now if you go and see the customer ledger, you will get this new transaction also affected. I'll just select customer A and press OK. Now you see here, previously it was 4,000, now 350 is added, so the balance is showing 4,350. Now if you go and see the aging, customer aging details of the same customer, just click here. Now you see here, this invoice is raised today. This is showing 0 to 30 days. So this is how you can see your aging. Okay, the same way you enter the purchase vouchers and see the aging. It is same. Only the thing is you have to enter the purchase voucher. Go to financials, reports, go to receivables and payables. Go to receivables and payable analysis. Instead of customer detail, click on vendor detail. Here you will have your vendor aging details. Whenever you book the purchase transactions, you can see the vendor statements, vendor list of outstanding bills and vendor aging details. Now I don't have any bills. Just I'll select all the vendors and say OK. Now you see I have only one vendor which is my opening balance, which is showing in my aging. It will show me in the 210 days only because it's my last year's transactions. Now whenever you record the new transactions, it will show you on the respective column. Wherever it falls based on the due date, it will show in these particular columns. So here we have covered receivables and payables. Now let us see the trail balance, how it appears. I'll just take it in the third level. Okay. Now you see here the trail balance appears like this. Now you see the latest transaction also it is showing. Under sales we have sales furniture. Okay, like this you can see your trail balance. Let me see my profit and loss. Now how you are going to see the profit and loss? I have just done my sales, but I have not recorded my purchase transaction. So it always show me a loss. Let me show you that. I purposely did this to show you. Okay. I go to profit and loss. I'll press OK. Now you see it is showing how much? 350. Okay. Actually, I have purchased this particular chair for 300 and sold for 350. But here it is showing me a 350 as a profit because there is no purchase. Now let me put the purchase and show you in the same date. Okay, I'll go to purchase as voucher. In the same date, what I'll do is I'll select one vendor. Okay, I'll select the main warehouse. I'll select the Neel Kamal chair purchased for one quantity for 300. Let me see what happens after booking this purchase. I'll go to profit and loss, select OK. Okay, let me see what is the date I have selected here. 1/4/2022, 6/11. Okay, I'll go to the purchase voucher. Okay, this is also done at 6/11. Okay, let me change this date and save it. Still it is not showing. What is the issue? Okay, this is not taking as a purchase. What is the issue? Let me show you that. Now here I have a purchase voucher. Instead of selecting a purchase voucher, I have selected the inventory furniture account. Okay, which I am not supposed to do. I have to select a purchase account. Okay, then it will show in the P&L. Now let me show you that. Now you see it is showing 50. That means 300 there is a purchase, 350 I have sold. Now it is showing only 50 as a profit. This is how you have to see your profit and loss account. Now I will show you how the balance sheet appears. Okay, all these reports you will see in the final accounts. Click OK. Now you see here also it is showing the same profit here 50. So whatever profit it is showing in your P&L, the same profit has to be shown here in the balance sheet also. Okay, now let me do one expense. Okay, I will spend 10 rupees for some expense. Now how to spend that? I have to make a payment, okay, or I'll do a staff welfare expenses. I'll just go to home, masters, account. Okay, I need to have that account in place. I'll go to expenses. I have direct expenses, purchases. I have COGS accounts. Okay, instead of that, I'll select my administrative expenses. Under administrative expenses, I have my office rent, utility charges, printing and stationery, courier and depreciation. Okay, now what I do, I'll just select, I'll just create one account called staff welfare expenses. Okay, I'll just give some code as an expenses. Here I'll select the type as expenses group. Okay, make sure you give the proper type, otherwise you will have a very big challenge in getting the accurate reports. Okay, now I have selected this staff welfare expenses here. Now you can see here. Okay, if I want, I can change the code. I can just edit it. Okay, I'll just give the proper code also here. I can just give like this. Okay, now I close this. I'll go to a payment voucher. Now where is that payment voucher? I'll go to financials, transactions, cash and bank. I have receipts and payments. I'll click on payments. I'll click on new. Okay, I'll click on my cash. Okay, I'll just select staff welfare expenses, 10 rupees. Okay, I can give my remarks or narration if I want. Being expenses incurred for staff T expenses. Okay, I'll save this. Now let me see. First, let me see my cash ledger, or let me see my cash book first. I'll select my cash account and press OK. Now you see, customer has paid me 1000 rupees. From that, I have spent 10 rupees. My cash balance is showing 990. Okay, let me go and see my ledger. Okay, which ledger I should see? I'll select all the ledgers and I'll press OK. Now you see here, all the ledgers it is showing. Okay, customer A. First it is showing the cash account, then it is showing the customer's accounts, it is showing the staff welfare expense account. Now where this account will get affected? Because it is an expense account, this will come under P&L. Let me go to the P&L. Profit and loss account and press OK. Now you see, I have spent 10 rupees, the profit has come down. This is how the P&L account will work. If you have any queries, please comment in my YouTube channel. I'm happy to answer your questions. Okay, like this you can see your P&L. If you want to see the trail balance, let me show you the trail balance also, how it appears. In trail balance, it will appear everything. The combination of P&L and balance sheet will come in the trail balance. Now you see here, everything you can see here in the trail balance. You can see your assets, you can see your liabilities, you can see your income, and you can see your expenses. All the combinations of these two P&L and assets you can see in the trail balance. Here you will not get any profit or loss. If you want a profit and loss, you have to go to the profit and loss account. If you want to see your balance sheet. Now what is this balance sheet? Balance sheet will show us the position of your company, where it is standing, how much you have to get the money from the market, how much you have to give to your suppliers, how much money you owe to bank, how much liquid cash you have. Everything you can see it here. Okay, like this you can see all the figures in this balance sheet. Now who will have this access? of these three particular reports, the financial controller, the main person in the company, will have the access of these three reports. Okay, the accounts who works under financial controller will have the access for the general ledger, sub ledger, sales reports, purchase reports, receipts, payments, credit notes, debit notes, and then petty cash and etc. Whatever transactions are there. But they will not have access to the financial statements, because financial statements are the major reports of the company. Okay, every company will give these reports only to the finance controller, who is the key person in the company. Okay, like this you can see the balance sheet. Okay, so we have covered the opening balances, we have covered the purchase transactions, we have covered the sales transactions. I have shown you how to make a receipt when customer pays you. I also shown you when you make any expenses, how to use your expenses by cash. Okay, now there is one more cash account called petty cash account. What is this petty cash account? In every organization, some money is used for petty cash. For every small money, a person cannot go to a higher position level and ask about the money. So what management does is, they give some lump sum amount, say 5,000, 1,000, whatever amount. So third person will manage the small expenses. What he does is, he will create one account called petty cash account. By default, there will be a petty cash account in Focus Masters, account masters. You can search for it. Okay, it is not there. Let me see, search any other account. Cash, yeah, we have only cash account, we don't have the petty cash account. Okay, here let me create a petty cash account. Petty cash account. This is my petty cash account. Now what is this petty cash account? You can treat this petty cash account as a one more cash account, or you can select as a cash or petty cash account. It is a combination of cash account only, but we are subcategorizing as a petty cash account. Okay, I'll just save this. Now I have this petty cash account. How to transfer money to petty cash account? Now I am holding some cash. Okay, I'll go to my cash book. I'll see how much cash I am holding. I'll select the cash account, main cash account. Okay, now I have 990. Now I want to give some amount, say 500 to my petty cash account. Now this petty cash account will be operated by the accounts assistant, who is responsible to make the small payments in the company. Now what company does is, they go to the transactions, cash and bank, payments. Click on new. From cash account, make a payment to petty cash account 500. Okay, being, you can give the narration, being amount paid to petty cash for utilizing miscellaneous expenses. Okay, I'll just save this. Now let me see the cash account position, where it is standing. I'll select the cash. Okay, and press OK. Now you see here, I have only the balance of 490. Now where this cash has gone? It is gone to petty cash account. So in the cash book, it will show everything. Okay, you can just put the narration column here. You can go to customize. You can just put the narration and you can see what is the remarks you have mentioned, what is the narration you have mentioned here. Okay, we have default fields. You can select this. Okay, we have extra fields. Okay, you just double click on narration, just save it. Here you will get all the expenses. Now if you want to expand this, you can expand like this. Okay, So this is how you can see the cash book. Let me go to the balance sheet now. In balance sheet, you can see the petty cash account also here. Now that is your current assets. Now you see here, under cash and bank, you have two accounts. One is cash account, one is petty cash account. If you want to utilize this petty cash account for purchase also, you can utilize it. Okay. If you want to do a cash purchase or petty cash purchase, you can do it. Okay. This is how you have to manage the accounts. Okay. In this, I have shown you how to see the accounts, how to manage the financial accounts. Let me show you the closing stock accounts. Now here you see we have done the purchases. Okay, I'll just show you one small example. Here I have only one quantity I have purchased. If I increase this quantity to 10, what happens? Now if I go and see my P&L account, now completely the report will change. What happens to the profit which was 40 rupees? What happens here? It is showing as a loss. Now how to see the actual figures? For this we need a closing stock accounts. Okay, in our ERP you have to create 4 accounts. Okay, those 4 accounts are our provisional entries. What are those accounts? One account you have to create as a opening stock balance sheet account, which is your asset account. Okay, opening stock P&L account, which is your P&L account. You have to create a closing stock balance sheet account. You need a closing stock P&L account. These 4 accounts you have to create and you have to call that accounts here. How to do that? I'll just show you. Now go to Home, Masters, Accounts. Okay. Now what I do is I go to my expenses, direct expenses. In this, what I do, I'll create one account called opening stock P and L. Okay. I'll just save this. Okay. Also, I'll create my closing stock. Okay. In this, you have to create 2 accounts in your direct expenses. 2 more accounts you have to create in the balance sheet, in the inventories. In inventories, you have to create closing stock balance sheet. Okay. Then create opening stock balance sheet. These 4 accounts I have created. Now to see the actual profit, you need to give the provision entries. Normally, in every company what happens, they will pass the journals at the year end. They don't want to pass anything in the mid of. So the provisional entries are maintained. If you don't want to pass the journal entries, you have to see your figures by passing a provisional entries. How to do that? I'll just show you. I'll just go to the profit and loss account. I'll click on provisional entries. Here, check on this option and give opening stock balance sheet account. Here you give opening stock P&L account. Here, check on this closing stock value. Give closing stock balance sheet. Again, in the credit, give closing stock P&L. After giving this, click on OK. Okay, it gives a message saved successfully. Now click on OK. Now you see you have come back to the previous report which is showing profit. Now how this has come, let me show you that. Whatever excess stock I have purchased, I have sold only one quantity. Now 9 quantity is left. That value it is reflecting here in the closing stock P&L. Now how to see that? You have a stock valuation report. I have already covered inventory module. Okay, please watch that video, then you will know how to see the stock value. But here also I am going to show you the stock value. Click on inventory reports, go to stock value or stock movement, any report you can choose. I am just selecting a stock valuation. Select all, give the date range and press OK. Now whatever stock value it is showing here, you have purchased 10 quantity, 1 you have sold, 9 it is lying in your physical warehouse. Those goods are valued to 2700. You have purchased one piece for 300 rupees. 300 into 9 which is 2700. This value it is reflecting in the trail balance, P&L and balance sheet. Okay, this is how you have to pass the closing and opening entries. With this our financial module mostly covered. Also we have PDCs, receipts and PDC payments. What is this PDC receipts and PDC payments? Whenever customer pays any money through a check or through a draft, okay, if it is a current dated check, you can directly deposit in bank. If it is a future dated check, you have to enter in post dated receipts. Now how to enter that? Let me show you that. In financial accounting, transactions, cash and bank, you have post dated receipts. Okay, let me take the same customer. I'll just select the bank. I don't have any other bank name. I'm just selecting a bank. Okay, this check the customer is given me for November 15th. Okay, the check number is 543210. Okay, the customer who is paid this check is customer B. He has paid me 1000. Now it will ask me the reference. Okay, he owe me 2000. For that he has paid me 1000. I am adjusting to this. I am entering. Okay, now these PDC checks, let me go and see in the ledger whether it is showing or not. I'll just select the customer. Okay, A. Here you have an option called display PDC based on the maturity date. Whenever this date will come, then only this will be shown in the ledger. Otherwise it will not be shown. I'll just click on OK. Now you see here, this is customer A. Okay, let me select customer B. Okay, this amount is received from customer B. Now you see, customer owe me 2000. He has paid me PDC and the balance is showing 1000. Okay, whenever this PDC is presented in bank, we have an option called convert matured PDCs. You have to convert that. Okay, also we have a PDC register. Let me show you the PDC register also. It will show all the PDCs which you have not yet presented. Okay, like this you can see the PDC registers and PDC receipt register and PDC payment register. PDC payment means what you pay to your supplier. PDC receipt means what customer pays to you for the futuristic dates. Okay, if you want to convert this, there is one option called convert matured PDCs. In this it will show all the PDCs which are with you. Here you can select whatever you want to select. I'll press select receipts. Okay, I'll select voucher number and voucher date. I'll just select OK. So it will show me all the PDCs which are available. No PDCs exist because customer has given me for 15th, but here it is showing as on date. So whenever you will get this date, all the PDCs will be shown here. When on 15th, the PDC will be shown. Okay, here it will ask me in which bank I have to deposit. You can select the required bank and deposit. You may have different banks in your company. Okay, by default you have put it in a bank, and if you want to change that bank name, you can change it here. Okay, so you can select this and click on convert voucher. Convert all vouchers whichever we have selected here. Okay, we have a filter option also here. You can filter on date. Okay, see here, it will not show you even if you filter it, because it will check the system date. Okay, in the other video I will cover you how to do the PDC receipts and payments in detail. Okay, by taking one transaction, I will just take the PDC check and I will show you how to cover the PDCs also. Here I am covering only the financial accounting part, so you can see the PDCs also here. So I have covered in finance, I have covered trail balance, P&L and balance sheet. Okay, you have many reports here, please go through it. In the upcoming videos I am going to cover about budget also. Okay, we have covered receivables and payables report also here. Okay, also in reports we have many reports. You can go through all these reports. We have cash and bank reports, we have sales reports, purchase reports, everything we have shown in the sales module and purchase module. We have registers. Okay, now we have debit notes and credit notes. Let me show you that also. You have sold some materials to a person. Okay, let me take you to the sales voucher. Okay, you have sold one particular share to this customer. Okay, for some reason you forgot to give a discount here. Okay, I have to give 10% discount. I forgot. Now what is the 10%? If I calculate 10% on 350, it is 35 rupees. So I forgot to mention this. Now customer will call me and ask me, I want this discount. So he wants to claim that discount. So what you will commit him is, you will give a credit note to him so that he can use that credit note in the future transactions. How to use that credit note? Go to financials, transactions, journals. You have a credit notes. Click on credit notes. Okay, select the account. Which account you want to select? Customer B. Okay, now we have a discount account. Okay, we don't have, or we can select any other account, not only discount, or we can select. If there is no discount account, you can create it. Now how to create that? Even you can create it from here. Just double click on this account, create discount paid. Okay, this comes under expenses because we are paying him. Now account type would be my selling expenses. Okay, I'll just save. What I'll do, I'll just give my discount paid. Okay, 35 rupees. Okay, I'll just save this. Now you see, it will ask me where I have to adjust this. Okay, I can adjust this. Let me see, it is the same customer to whom we have invoiced. I think it is not. We have invoiced to customer A. Okay, there we are selecting customer B. So let me select in the credit note as customer A only. I'll just select customer A. I'll just select discount account and I'll select here. I can mention the being discount credit note given. Okay, now when I'll save, it will show me all the transactions related to the customer. Now to which invoice I forgot to give this invoice, so I'll just adjust this and click OK. Okay, like this you can give the credit notes. Now we have debit notes also. What is the debit note? On what situation you will do the debit note to customer? I'll give you one example. Customer has paid you a check. You have presented in the bank. For some reason the check got bounced. The bank person has charged you 50 rupees. Now you are not liable to pay. Even though you have paid to bank, because it's your bank, you need to collect from the customer. So what you do, you will call the customer, you will inform him that we have paid 50 rupees to our banks because of your check bounce. So the customer will say, please pass the debit note to us, we will pay that amount. So in that case you have to do a debit note. Now how to do that debit note? I'll just show you. Go to financials, transactions, journals, click on debit note. So you'll have many examples. I'm just giving you one example. Okay, I'll just select customer A. Okay, being check bounced. Bank charges applied. Okay, so here what I'll do, I'll select my bank charges account and I'll give 50. I'll just save. Now I'll save it as a new reference. I will not adjust to any account because I have to get this money. Okay, like this I can give the debit note. Let me go to the ledger of that customer and show you how it will show you. Okay, I'll just select the customer name and click on OK. Now you see here, you can see very detailed report. Debits are 5,400, credits are 1,035. Okay, now you see the debit is showing 50 bank charges. Okay, here it is already affected. Like this you can have the debit note also. Like this you can work on the debit notes and credit notes. We have covered receivables, payables. Also we have covered all the reports. We also discussed about credit notes, debit notes, aging analysis. We only left with the journals. Okay, and also about the banks. We have shown you the cash book also. Let me show you the bank reports also. How to check the bank reports. Now go to financials, reports, click on cash and bank, go to bank book. Select the required bank, whichever bank you want to check, and click on OK. Now here you see there is no receipts in the bank. Okay, if there are any receipts, it will show you all the debits and credits and the balance. Okay, if you want to give the check number also, you can give the check number. Go to customization and select the check number here, and you can place it here like this. Okay, like this you will get the check number also. So in the upcoming videos I am going to explain you about the bank reconciliation. Okay, it's a separate video. I'm not covering in this. I'm just showing you the bank book. Also, let us see what are journals. What are journal entries? Basically, the journal entries are used to rectify the transactions. Okay, the norms of the journal entries only is to rectify the transactions. In some cases, journal entries are used to adjust the accounts. Now, what is this rectification of account? Instead of passing a debit note or credit note, okay, in previous days, people used to just pass a journals. Okay, just now I have shown you how to give a credit note, how to give a debit note. instead of that we can use the journals also, but using journals are not the correct method, but I'll just show you. Click on financials, transactions, journals, journal entries. The same entry I'll show you how to pass in journals. Debit note, if you want to pass a debit note, select the customer name, okay, give the amount, click on pick amount, okay, and select the credit account, bank charges, save it. Now it is asking to adjust the bill, pick and say okay. Now save it. Like this also you can pass the journal entries. Now what is the adjustment of the journal entries? Okay, this is one kind of rectification of error. Okay, same entry I will just pass it to the same customer. Within the same journal entry I'll say discount paid. I'll just select the discount paid here, and I'll select the debit as a credit as to the customer A. Okay, debit discount paid and credit to customer A. Okay, 35 rupees. Like this also you can adjust it. Okay, you can adjust to the particular bill. Like this also you can adjust it. Okay, this is, and then save. This is how you can do the rectification of the error. Let me show you how to do the adjustments. Okay, now when passing the journal entries also, the journal entries will affected in the ledger. Let me show you all the ledgers of the customers ledger. I'll just select the assets. Under assets I'll just select the current assets. Okay, now you see here I am getting all the customer account. Now you see NJV. Okay, this is my JV 35. Now you see on the top there is a credit note here. This is the credit note and this is a JV. The credit note also passed the same entry, JV also passed the same entry. But as per the norms, Indian norms or the accounting norms, you are only allowed to give debit note or credit note. JVs are not good to use. Okay, if you have more JVs, that means you have more discrepancies. Okay, so please note this. If you have more JVs in the organization, that means you have more discrepancies in your accounting books. Okay, now I'll show you what is the adjustment of the accounts. You have two customers, customer A and customer B. Now customer A and customer B have a ledger. I'll just select customer A and customer B. Now you see customer A has a balance of 4,330 and customer B has a balance of 1,050. Okay, these two customers are related to each other. Let's say the customer A and customer B both are brothers. Okay, customer B is not paying me the money. Okay, so I'll just force my customer to pay the money. I'll request my customer to pay the money. Okay, so this thing customer A came to know. Now customer A calls me and tells me whatever customer B owes to my company, that he is going to pay. He will request me to adjust his account under his account and send the statement so that he will pay. So in these cases we have to pass the adjustment JVs. Okay, for this you have to use the adjustment JVs. Let me show you how to use that. I'll go to the journal entry. Okay, customer B was showing 1,050, right? I'll just pass this amount to customer A. How to do that? I'll just go to journal entries. I'll select new account, new journal entry, being customer A accepted to pay customer B full amount. Now what happens here? I'll just debit to customer A with and customer B as credit, and I'll just give my amount. Now here you see pick amounts. Okay, save. Now you see if both are party accounts, it will not allow. Okay, so in journal entries you cannot adjust both customer accounts. So for that, what we have to do is we have to first pass that to the bad debts. Okay, let me show you how to do that. Now I will pass this customer B amount to bad debts. I don't have the bad debts account. Okay, I'll just create. So this is my expense group. I'll just save it. First what I do, I'll just select the bad debts. Okay, now I'll just pick it. Okay, now what I'll do, now I will debit my bad debts and credit my customer I'll just debit my bad debts and I'll credit my customer B account. Okay, now I have this pick. I'll just click this. I will adjust this bills and press OK. Now this amount I am going to debit to customer A. Again I'll credit the bad debts. Okay, 1050. Now I'll just click on pick amount and press OK. This is called adjustment JV. Okay, now it is adjusted. Now if you see the posting details, now it will show customer A and customer B are adjusted. Now if you go and see the ledgers of both the accounts, I'll just go to the ledger. Okay, I'll just select customer A and customer B. Customer A and customer B. Now you see here customer B has become nil and this amount is transferred to customer A through bad debts. So this is how you can do the adjustments of the JVs from one account to another account. Okay, so we have covered everything as per the financial accounting. If you like my video, please subscribe and give a like. Thank you.